welcome to BloombergQuint. We're joined by Mr. Dinesh Khara, the new chairman at State Bank of India, just took over last month, and this is the first quarterly results that he's presenting as the head of India's largest lender. Mr. Khara, welcome to this discussion. Just wanted to get a sense from you with respect to your provisioning number an lot of your profit growth has come on the back of lower provisioning as compared to last year. Plus, of course, an improved net interest income, which the core income having improved year on year again. Wanted to get a sense, at a time when a lot of banks are actually going up on provisions, you brought it down on a year-on basis. Just wanted to get your sense on this.
I think, thank you very much, Vishwanath, first of all. And when it comes to the provision numbers, I think it is a function of the kind of a book which we have. And also, I would like to draw your attention to the fact that our PCR, when it comes to the corporate book, it is as high as about 88%. So as far as the legacy book is concerned, we are well provisioned as far as legacy book is concerned. When it comes to our current business profile, so we are at about 61% of our loans are into the retail sector and 40% are in the corporate sector. And when we have done this provisioning, we have actually given a complete color in terms of how our slippages and our restructure book looks like for the current year. And in the first half, we have already seen the slippages for 6,393 crore. In fact, we have already provided for these slippages. And when it comes to the pro forma slippages, which we have termed it pro forma slippages because under the instructions of Honorable Supreme Court, we are not permitted to stamp accounts under NPA category, and that is why we have worked out an intermediary structure through which we have identified the accounts which are under stress or maybe which would have been stamped as NPA as on 30th September if at all Supreme Court order would not have been invoked. So that number comes to about 14,388. So in the current quarter, we have provided for this number. In addition to that, we have already received the request for about 6,500 crore worth of restructuring. So which makes it about 6,500 crore. Also, we are required to provide at the rate of 10%. So we have provided for that 10% also. And I think what I would say is that whatever extra provisions were required in terms of IBG, etc., that also we have already provided for. So all put together till in the first half of this financial year, our provisioning requirement had worked out to 7,091 crore, which we have already factored into our profit and loss account. So when it comes to how other banks have increased their provisions, I would say that in the first quarter, we had actually provided for one of the large housing finance company also to the extent of 3,400 crores. Right. So I think when it comes to our assessment of our loan book and the likely impairment which is seen, we have done the provisioning as per the requirement. We don't expect that. I'll not be in a position to comment that at what rate other banks have provided, but we have looked to our loan book and provided appropriately for the kind of quality of loan book which we are seeing.
Right. Another question I wanted to get your attention on the restructuring portfolio. You already said about 6,500 crore worth of restructuring requests have come in. You're expecting another 13,000 crore in the in the upcoming months before December 31st. Want to get a color on this. Are all of these going to turn into restructured accounts? Is there going to be some sort of pullback, etc.?
No, as I was mentioning, out of this 14,000 crore, also about 6,000 crore we have already pulled back.
Yeah.
So to that extent, that is for sure. And out of this 13,000 crore also, there could be a possibility of pullback also. So I think we'll have a clear picture when we will be nearer to the quarter end. But before that, we are only trying to see that we should account for all possible threats and we should be prepared for it. So that is something as a policy and approach, that is something which we are adopting.
Of course. Just staying back at the restructuring point now, as far as SBI's book is concerned, the size of SBI's book, the restructured accounts at about 19,000 crore. It's a very small number. Just wanted to get a sense from you. Is it because people just do not want to restructure their accounts, or is there an element of the bank deciding whether these accounts should qualify or not?
No, actually, when it comes to our effort, we are trying to guide the corporate, guide the customers whether should they stay. I mean, should they go for the restructuring? Should they not go for the restructuring? But that is also a function of when we look at their account and their cash flows.
Yeah.
So if at all the cash flows are under stress, our recommendation and advisory to all the borrowers is that they should go for the restructuring.
Okay.
But if at all people have not paid off because they were trying to conserve cash, then perhaps even on their part also we have seen that there is an effort that they would like to repay rather than go for the restructuring, because all said and done, restructuring will have an impact on their bureau scores, etc. So nobody would like to have their bureau scores impacted if at all they are having a cash flow available with them. But if at all their cash flows have got impaired and there's no visibility of the cash flows coming back, then it's always better to go for the restructuring as against the account turning NPA.
Right. Coming to your investments portfolio, that has shown about a 35% growth, year on year. Just wanted to get a sense how sustainable this is. I mean, I understand sometimes these things go up because of the way rates move in the market, but how far do you think this will last? Whether your corporate customer is entirely moving towards the debt market for any kind of fund requirements?
I would say that it's a situation where we have the corporate bond book, which is at about 17% of our total investments of about 13 crore 40 lakh. So in this book, we have a very significant component of SDLs. Actually, SDLs have gone up from 9.2% to about 12%. And the other very important area where the growth has been seen is the GSEC and the Treasury bill. So corporate, if at all they are inclined to avail the investment book, we are happy to support their efforts. But if at all, I would say that the growth is also seen even beyond the corporate book also, which is seen in the GSEC and the SDLs. So that is something which is a reality.
Is that a function of high liquidity available with you and probably fewer avenues to lend?
Absolutely, I think that is one of the reasons.
And will that change anytime soon?
See, if at all we will see the credit growth, we are in a position to unwind our position in the investment book, and we can deploy it for the credit.
Okay. One question on the retail personal loan segment. Wanted to get a sense. You've shown about a 61% year-on-year growth on the disbursement side. Any fears at all on that book?
No, we don't. In fact, when it comes to underwriting in the retail book, we are very mindful in terms of the quality, and I think we have enough scope for growth in the retail segment in this economy. And I would like to mention that in this current year, we started creating a portfolio of gold loan, personal gold loans, and we have already built up a book of about 12,000 crore in the first 6 months itself. So I think I would say that when it comes to home loan, auto loan, personal loans, there's enough scope for growth in the remaining part of the year and for some more time to go.
All right, sir. Lastly, do you feel that by March 31st, the agenda that you started with as the chairman, you will more or less achieve that?
Yeah, I hope so. That will be strong on the track which I have thought of for the bank.
All right. Thank you so much, Mr. Khara, for joining us on this conversation.
Thank you very much. Thank you.